Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so we have Macro Monday here at Container Exchange. Let me quickly share my screen to give you a little bit more guidance on what I'm talking about. This week, relatively quiet on the macro front, so to speak, and at least in terms of really market moving indicators. Of course, there's a lot of things going on, but nothing that really sticks out and is expected to move markets a lot. With one exception, of course, and that's inflation rates figures in the US. We have on Wednesday, we have the US PPI, so producer price index coming in for September. So this is essentially the inflation rate for producers. That is expected to decrease to a 0.3% increase following a surge to 0.7% in August. That surge in August was driven by energy, transportation, warehousing costs. So it is expected to ease down a little bit. And then on Thursday, we have the same come in for just general inflation rate, so core inflation and general inflation rate. And that's also expected to remain relatively stable at a 0.3% month-on-month increase, which then translates to a 3.6% annual run rate, so to speak, so year-on-year inflation rate. That is still significantly above the Fed's inflation target of roughly 2%. And you can also look at what this looks like in terms of the historical comparison. I added two graphs down here. The left-hand side is the producer price inflation on month-on-month, which is the figure that is going to be released on Wednesday. And then on Thursday, that's the right-hand graph, the month-on-month general inflation rate. And as you can see here, sort of at the beginning of 2023, we had that absolute high on both sides. Actually, the producer prices peaking before the consumer prices did. And then we had that sort of reduction here, that significant reduction that was driven by particularly sort of the Fed's intervention, significant interest rate hikes. We've covered this extensively here in the DDOI. And then sort of inflation rates have bottomed out, at least sort of what it looks like, but we've now seen this peak up again. And of course, the key question here, because also oil prices are such a big driver here, is what the new conflict or the flare-up of the conflict in the Middle East, in Israel, Palestine, will mean for that. What will this mean for the economy as a whole? What will this mean for inflation rate? What will this mean for oil prices and the strength of the US dollar? So all of that is very, very much in focus for this week. So stay tuned for those inflation figures. I think this is going to tell a lot about where also the interest rates and the Fed is going to move in the months to come. Right, that's it from me, from us for today. Thanks a lot for tuning in. We have our intermodal Amsterdam this week. Of course, we as Exchange are there. It's in H50. So do come by for a chat, for a cup of coffee if you're around. It's definitely an exhibition that is not to be missed in the calendar of every container logistician, container trader, or other sort of related field. Thanks a lot. Take care and have a fantastic week.